Hey, what's up, guys? This is Sam, and I'll be doing the free video for Monday, July 25th, 2022. So we have a pretty big week ahead of us. Should be a volatile week, I would expect. You have some central bank decisions, you have some inflation numbers coming out later in the week, and then you have a few $1 trillion worth of megacap tech earnings. Usually on weeks like this, at least historical precedent has told me that it's better to day trade because that way you get to take advantage of both sides of the volatility intraday and you don't carry home any risk, which is pretty attractive on a volatile, possibly choppy week. But there's a couple of bright spots here. So tomorrow will be the beginning of Megacap tech earnings. I think you get kicked off with Microsoft and Google, and then later in the week you're going to have Amazon and Apple. So that is what is on deck. Let's focus actually on a couple of sectors that look pretty good on the periphery. So I'm going to start here with healthcare, and this will probably be the one focus. I could kind of bring you a couple of other ones, but I think healthcare here just kind of is speaking to me the most clearly, I would say. So you're starting to get a daily squeeze here, and just be aware your resistance level is 131.5. This dashed white line here that you see, that's the VWAP for the beginning of the year. So that's the average weighted price for the entire year is 131.50, and it has been your resistance level basically throughout this entire move. So you do have to get above 131, 132, which is going to be major resistance. But the question is this the right setup to do that? And I think it might be. So we're going to cover XLV as a whole, and then I'm going to show you a couple of different setups inside of it. So there's also a little bit of a head and shoulders pattern here. Right, so you can imagine if it gets above 132, it starts to trigger this pattern long, starts to trigger the squeeze, and things start looking a lot more improved in the healthcare space. So in terms of picks inside of healthcare, a couple of names here that came up this week, and I'm just going to go through these fast, really kind of fast and furious with you guys. UNH came up, pretty clean setup. If you look at some of its competitors, Humana, Cigna, CNC, they're all trading near highs, and this one has yet to do it. It's also the biggest stock in the Dow. So what I'm looking for is something like this. And this one, frankly, has a better setup than XLV. So I do like UNH here as a proxy for healthcare. Another one that came up was LNTH. And this one's pretty clean as well. This one's pretty volatile as well, but the setup is rather clean. So LNTH here, as long as it holds 68.2, which is the 618 of the high to low drop, 68.2. The closer you can get it there, the better. As long as it holds above that, you do look to make a new high and a breakout based on the weekly squeeze and the daily squeeze on LNTH. Another one is going to be Lilly, LLY. So the drug makers can be a little bit tricky, but this pattern is just pretty good. So I would have to believe that it will be a positive result. So Lilly here, technically it's already triggering its squeeze. If you look at the squeeze here, it's a high compression variety. You can tell because it has a magenta dot right there, and now it's a red dot. So that's technically a trigger. Still holding inside the moving average wave right here between the 8 and 21. So all good there. The weekly chart is a dreamboat, weekly structure, hourly thrust, pretty solid. And another one here, and this one's not really tradable in the options market, unfortunately, from what I saw. It's a little too thin, but the setup is very good. And it's McKesson, MCK. So this one's already going for it. This one's probably one of the cleaner ones that I see, but the only way that I saw how to trade this was be through stock. I didn't quite see a way to do it through the options market. It was just too wide. But very clean pattern here on McKesson. And I'll give you a couple of more, maybe some cheapos. Let's go to OHI. So nice little breakout pattern here setting up an OHI. Pretty good everything here. I like everything that I'm seeing. Mostly, I like the fact that it's gotten over the 50-week simple, and it has a very strong squeeze with an up thrust and a fresh cross. All through here, this is all generally very good, and you can see it's starting to trend here from the inside out. So OHI is a nice little complement here to the healthcare idea. Then I'll give you one more, and this one's been a little bit choppy, but the pattern is certainly there, and it's going to be Amgen. So on Amgen here, a little bit of a flagging pattern into the report. The signals are certainly there for a rather large move after the report. You can see all of the signals here. Green above magenta, multiple buy arrows, daily squeeze, holding structure, making a little bit of a flagging pattern here, ideally. So I think focusing here on healthcare, I know that it's like tech earnings week and that's the thing to do, but I think maybe if we look at other things outside of tech, that might generally be the easier trade for the week, and then we day trade basically the SPY, the Qs, and whatever tech stocks you like for their reports. So we'll go ahead and cut it off there, guys. I just wanted to kind of pepper you with a couple of healthcare picks just because I think the sector looks good, then a lot of the picks that I brought you here look even better than the sector. And there's very few things in this market that look better than what I showed you. So not I won't say off the beaten path necessarily, but not your traditional, mega cap tech on a mega cap tech earnings week. But the setups that I've shown you, I think, are quite a bit better than the mega cap techs for now. All right, guys, that is my time. Thanks for stopping by, checking out our channel. Don't forget to leave us a like and a subscribe before you go somewhere else on the YouTube, and we certainly would appreciate it. It definitely helps us with the algorithm. So thanks for stopping by, guys, and we'll see you for the next video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.